Namaste, viewers. It's Friday morning, April 11, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. A reminder to all viewers that markets will be closed on Monday due to Dr. Ambedkar Jayanti. Benchmark equity indices settled with losses on Wednesday, despite the Reserve Bank of India's Monetary Policy Committee deciding to cut the repo rate by 25 basis points to 6% from 6.25%. The six-member panel also shifted the policy stance from accommodative to neutral, indicating an intent to support economic growth amid rising global uncertainties. This was the first policy review of the new financial year. After posting strong rebound in the previous session, the Indian markets on April 9 were under pressure as weak global markets led to the selling in most of the sectoral indices. However, sentiment worsened after the RBI lowered its GDP growth forecast for FY26 to 6.5% from 6.7% earlier and reduced FY26 inflation forecast to 4% from 4.2%. At close, the Sensex was down 380 points or 0.5% to 73,847, and the Nifty was down 137 points or 0.61% at 22,399. The RBI has signaled a decisive pivot towards growth, with inflation expectations anchored. FY26 CPI forecast now revised lower to 4%. The central bank has found room to support demand without risking macro stability. Still, uncertainty around tariffs has left investors on edge. Uncertainty reigns supreme. How global trade and global economy evolve from this chaos remains to be seen. But market downturns will offer opportunities for brave investors with a long-term view. Having said this, India is likely to be among the least impacted large economies in this Trump shakeout. Domestic consumption remains resilient, and the 25 basis point rate cut could provide further monetary stimulus. The sharp drop in crude oil prices is also a positive for India. However, a global recession or worse stagflation could cause serious damage, and investors should remain cautious. The top gainers on the Nifty were Nestle, HUL, Tata Consumer Products, Titan Company, and Power Grid Corporation. Biggest losers were included Wipro, SBI, L&T, Trent, and Tech Mahindra. Among the sectoral indices, FMCG stocks outperformed, rising nearly 2% as the RBI's rate cut and lower inflation forecast sparked hopes of stronger demand in the new fiscal year. On the other hand, Nifty IT was the worst hit, crashing over 2% on continued concerns around tariffs. The broader market reflected the weak mood, with mid-cap and small-cap indices falling 0.5% and 0.9% respectively. Analysts too remain wary of this space as valuations still haven't eased. Amid the broader sell-off, shares of Asian Paints and Berger Paints gained, buoyed by a sharp decline in crude oil prices. Brent crude dipped below $62 per barrel, marking a drop of over 30% in the last year. Morgan Stanley has lowered its forecast for Brent, now expecting it to remain in the 60s through the second half of 2025. Stock specific wise, Senco Gold was locked at upper circuit on posting highest ever revenue, and Shalimar Paints gained 3% as Brent crude slipped below $60. Home First Finance Company rose 4.5% on launching QIP, while Shilpa Medicare shares fell 5% despite US FDA approval for varenicline tablets. Stocks to watch today: TCS, Biocon, Gale, Greaves Cotton, Sun Pharma, Dishman, Cabo, Gen, Amsys, Coromandel International, TARC, Bharti Hexacon, Infosys, Aurobindo Pharma, Bharat Heavy Electricals, Bank of India, Tata Steel, Sanofi India, Punjab National Bank, Axis Technologies, JSW Energy, Eternal, Federal Bank, Bajaj Healthcare, SRF, Samvardhan Motherson International, IIFL Finance, and Northern Arc Capital will be in focus on April 11. What now for today? Nifty continues to trade below the upper band of the falling channel and the 21-day EMA, indicating short-term weakness and resistance near 22,500. The RSI shows a bearish crossover, reinforcing the negative momentum. The trend is expected to stay below 22,500, with a breakout potentially driving the index to 22,750 to 22,800. Failure to cross 22,500 may drag it down towards 22,000. If the Nifty crosses 22,500, then 22,700 to 22,850 will act as a critical resistance zone. If this is breached, it could lift market sentiments. Volatility is likely to be the order of the day over the next few weeks, with a negative bias as uncertainty caused by the US decision to impose different import tariffs have pushed investors to reduce equity bets at regular intervals. With local currency taking a huge knock over the past few sessions, coupled with renewed FII selling in the current month so far, investors should maintain caution. In the US overnight, the US China trade war angst continued to be felt on Thursday after a historic rally on Wednesday. Equities fell on Thursday. Closing of trading, the S&P fell 3.5%, the Nasdaq fell 4.2%, and the Dow Jones Industrial Average fell 2.5%. Brent crude is $63.42 a barrel. Gold is 92,170 rupees per 10 grams, a record high. Silver is 92,030 per kilogram. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will now see you on Tuesday morning, as the markets will remain closed on Monday for Dr. Ambedkar Jayanti. Have a great long weekend. In the meantime, stay happy, stay inspired, happy investing, and remember, it's all about money.